So, um, what I am going to do here is that I'm going to give out a weekly recap of what happened in the markets this week, or rather, from my own understanding of how I seem to dissect and understand the markets, and what I'm going to couple that with is basically showing an insight of a move that I called the prior, I think it was on Tuesday. Basically, it was me calling the high of the day on Tuesday and how I managed to trade that. So I'm going to basically put a video within a video, but that's going to be done during the editing part of this current video that I'm making right now. Now, if normally the weekly recaps that I do is only for my trade room members, but I decided, like, for a one-off leading into the second month of the year, I am going to share this weekly recap with everyone, basically everyone on Instagram, YouTube, basically everywhere I have people listening. So this weekly recap, this would give you an idea as to what happens within the trade room. So let's get to it now. Looking at price this week, the I had a bit of a uh, I was indecisive as to where I really wanted to stand, but the one thing that was obvious was that the bulls had the upper hand in the market this week than being bearish. Though there was still a possibility that price could push lower. Now, if you go ahead and look at the 4-hour charts and I applied period separators, you would notice that this was acting as a low of the year before this happened. Now, I call this, sorry about that. Now, I call this the intermediate low of the year because this right here was January's low. So if I mark this out as being January's low, it's not going to be too perfect. So yeah. So now this is January's low, and apart from that, we drove into the body of an order block. So we drove into the body of an order block, and then we took out the intermediate low of the year. This had confirmed that liquidity had been taken from one side of the market, and if you're looking at this as a range, what you will notice is that this is the range low, this is the range high, this is the equilibrium. You can see this is where price was making its decision before this happened. I'm going to explain what the 50% level had, what effect the 50% level had, and how you can use it as a decision maker here. Now, price did all of this, took out the intermediate low of the year, took the liquidity out from January's low, and then drove into the order block, then pushing into the end of the month, we started seeing higher prices. Now, prior to this week, this is all what we saw. So all of this from here to this end, nothing was on there. So the first thing I was looking at was this 4-hour breaker here, because this is the candle that sends price down, right? This is the candle that sends price down to take out the intermediate low of the year before pushing higher and closing above it that same week. Now, even on the daily, if you go down to the daily, or rather if you go up to the daily, this was a daily order block, or rather this is a daily order block. And again, we had a daily breaker. So we had a daily breaker, a daily order block, which daily order block played out, equally acted as the 4-hour breaker. So coming to this Monday, I'm going to apply the precipice and go down to the hourly now, and let me show you how I map this thing out day by day, intraday, and how I basically reacted to everything that the market did. The first thing that we had was price taking out Friday's high. Now, how I look at the markets is basically there's liquidity above the previous day's high and the previous day's low. And when liquidity is taken from each one of those sides of the market, price flips the other way. Now, the reason why I was equally having it at the back of my mind that there could be a possibility that we could have shorts on this Monday is because of this large void here. Now you can see those like straight up candles with little or no trouble areas of price pushing high. It just had nice clean up candles apart from this one, and then price just kept on pushing high again. So when I saw price take out the intermediate high and I saw this happen, I was expecting price to push lower. Now when price dipped into the 4-hour breaker and I didn't see price push lower, I decided to sit out. So on Monday, I personally did not take any trade. People in the trade room, the students, the members, people went long from here, compounded positions here. Now, I personally did not take a trade on this day. I decided to just sit down and watch because I don't like it when I have liquidity below market, and then when I equally have liquidity above market, because the liquidity above market was that we had taken liquidity out of this low and then we were going to seek for higher prices, but then there was nothing stopping price from retracing down to this level here before we start pushing higher. So that's why I decided to just sit out and watch it, because over time, I don't know about for other people, but me over time I've realized that I'd rather be very selective about my trades and pick the high quality trades and pick everything that looks as if it should be a trade. That's how I basically work. So now price pushed higher, broke above this breaker here, but then left an order block. So here we have a breaking market structure. So here we'll have a breaking market structure, and then price pushes back down into this order block. So price pushes back down into this order block before pushing higher and then closing a bit higher for the day. Now you would have either taken the trade from this order block here, or you would have taken the trade from this breaker right here. Now depending on how many pips SL, which basically the stop loss you put below your breaker, now this is 6, so if you had an additional 4, just making it 10 pips, you would have been safe. If you had anything less than 4, you'd have been stopped out by the second candle here, or you would have gotten in from the breaker, from the order block. I personally, I just trade only breakers for my entry, so I would have been stopped out if I took this trade on this day. Genuinely, I would have actually been stopped out, because I don't think I would have used like a 4 pip stop loss. So sorry, a 4 extra pips stop loss below the breaker, I would have stopped out, but I didn't trade on this day. Most people that took the trade from the trade room, they went in from the order block and then they had higher price. Some people got stopped out, most people got this trade on correct. Now this is what happened on Monday. So I realized, okay, on Monday the tone had been set, but then coming into the next day, I realized that we were just short of a key level, which was 1.1450, and I'm going to explain why I chose this level. 1.145, yeah. So basically this is the level I was calling in the previous day, and what I'm going to do now is I'm going to insert the other clip from my daily insights, so you can see basically before time how I called out this level and the trades that I took for this level. This is what I would like to see. So which is about institution level. I'll just call this 1.1450. So 1.1450. Yeah, just adjust this back out. Yeah. So 1.1450, if I apply this. Really? Sorry. Okay. So 1.1450, we go down to the H4. If we go down to the H4, the same level, I'm expecting price to key off of this level tomorrow. I would like to see a reaction from here, and that's should be about 10 pips from today's high. So a little bit off 10 pips. So what I would like to see is a 10 pip run above the previous day's high and some sort of retracements. So what I would like to see is basically a 10 pip run above the previous day's high. So if I measure 10 pips from here, yeah. So now I have done that, and you've seen basically real time me calling out this level, and this is not just me making up fancy stories to sound cool or whatever. Like I actually called out this level, and most of you that have been following me already know that I call out things before time. Now the reason why I called out that level, again, let me just do a quick recap here for Tuesday. Was now on Tuesday, this is the level here. What we had on this level was a daily order block. So if you look at this, here's a daily order block here, and I knew that there was going to be some sort of reaction from this level. I wasn't expecting something so massive like, oh yeah, we're going to come back down, take out this low, drive to 1.12. No, I was just looking for the quick reaction, because I realized I can do exponentially well once I know that there's a 50 pip grab for me. Once I know that there's a 30 pip grab for me, I know how to play to my leverage and pick on that. That's why I do not trade as often as I used to. I would rather wait for those trades that are almost no-brainers, and then I play to my advantage. And that's why for this month I did over, I think it was about 100%, and I took very few trades. Those numbers are not like, I've seen people do more. It's nothing too serious, but you have to learn how to dissect, like how to basically sift through trades and pick the one that makes more, basically the risk reward on that is much better. I'm not just talking about R, like FIP R, but basically, is this worth it? If it's not worth it, I will not take the trade. And that's why I sat out on Monday. And yes, I missed out on the move that most people made money from, but it wasn't just worth it for me risking my money on that day. Now, here was the daily breaker, and the low of this breaker wasn't actually 1.1450. It was something a little bit different from this, but I rounded it up to the whole number, which gave me 1.1450. So now if you go back down to the 15-minute chart, what you're going to have is this. So when price drove into this level, London Open, it just keyed off of this level, and when I saw this big drop, I knew, okay, whatever I was expecting was about to take place. So I waited for I had a different way I approached this. Now I'm going to be a bit techy here. So what I did first, I was on the 5-minute chart. Now I had this breaker here, but I didn't feel confident going in from this breaker because I knew that price could easily blow this through. There was no real market structure shift. There was nothing really happening. So I pulled out the trend line. Now I don't just trade trend lines alone, like there has to be some confluence. So I pulled out this trend line, and this was exactly what my trend line looked like. So I realized I kept on seeing bounces, bounce. So I told myself, when I see a break below this trend line and a close above, I'm going to get back in. So when I saw this happen, I got in using this order block here. So I got in using this order block here, and then when price dropped lower, I scaled up to the 15 minutes, and then this is where I then had the bigger lot sizes. This right here was basically almost no risk, like I had very minimal risk on it. But then when I finally saw the close below the 15-minute break, if you're wondering what break I'm talking about, look at this. This is the candle that sends price up to take out the previous day's high, and this is the same candle that sends price up to drive into an order block. So there was a lot of confluence behind this one candle here. So if you mark out this candle, a close below the retest, this is where I got in. So I had two heavy positions here, and now what I was just looking for was for price to run below the Asian session low and then probably take out this low here. So I was looking for price to take out probably this low here, but then I had a contingency plan. So my plan was price to take out the Asian session low, but then I was looking for a 10 pip run below the Asian session low. And how you can easily do that is you do this. If you do not know, price basically runs from 10 pips, 15, 20 pips below key levels. So 10 pips below Asian session low, this is what I got. Now it wasn't a perfect 10 pip run, but this is basically off by 5 pips. So when I had this price basically retest, when I had the first drop low, at this point where we took out the Asian session low, I collapsed this position. I collapsed about 50% of this position here, and then because I saw the pullback coming, and I told everyone in the trade, like, oh hey, look, price is taking out the Asian session low. We could easily see a reversal because, mind you, this is an order block here. So price can easily key off of this. Obviously, it didn't key off of the top. It pulled back. It pulled into the body of it before doing that. And then when I had the second drop low, which is this one, I moved my stop loss into profit, and I got taken out with my stops in profit, which I'm happy because all of this happened and price pulled back into it. Now, going into the next day, what I'm just basically doing here is I'm giving you a day-to-day of how I saw price react and basically what happened in the market. Now, what I saw the next day was that price ran up to that level, but then if you look closely, price refuses to take out the previous daily high. So the previous daily high was about 1.14502. This high is 1.14. Nah, that's not it. Well, if you look to the bottom of the screen, the high is actually 1.14499. So what happens is that price falls short of taking out the previous daily high. Right, so price basically falls short of taking out the previous daily high. Price falls short of taking out the previous daily high. So I realized that this here was a double top. So if you look at this is a level for buy stops. So in the morning in the trade room, I told everyone that this level for me is not safe, in the sense of it's almost too perfect. These highs here were almost too perfect. These highs, they were almost too perfect. So there's a reason why they're leaving these double tops up. Now you have to understand, this is why it's always good for everyone to go through baby pips before like going into the more technical aspect of trading. Because basically what happens is if you go through baby pips, you have a better understanding of the technical side of price, in the sense of if you go through baby pips, you have a basic understanding of the basic side of price, or what double tops mean, what double bottoms mean. So what happens is that this market sets people up to I don't know what word I should use. I wouldn't say for failure, but the flop. Most people are doing this same shit every single time, which is basically everyone will sell double tops, have the stop losses. And now what happens is that the market will actually react to a double top. The market actually reacts to a double bottom. None without a doubt. That actually happens. But you have to know when to get out. So yes, this was a successful double top for about 40 pips. But if you fell in love with it, you would have been taken out. And I used to tell people, like, I'm not interested in being in this move. I want to be in this one here. I don't want to be in that move that acts lazy all day. I want to be in that move that basically within the snap of a finger, I get like that massive turn in price and everything goes my way. So on this day, I just sat back and I watched it. Yeah, there was a breaker play here that you would have used, and you would have still banked enough pips. Like, let's say if you went down to the 5 minutes and you go to that day, if you go down to 5 minutes and then you go to that day, you would have actually made profits here. So alright, sorry about that. So basically, if you went short from the 5 minutes breaker, so I'll mark this out. So if you had gone short from the 5 minutes breaker and looking at the risk to reward, even getting out at this point here, that would have been an 8 hour. If you decided to hold it back for the retest, you would have probably made like a 16 hour, which is still decent. But what I was concerned about was that FOMC move, because first of all, the reason why I was more suspect of this highs is because we had FOMC coming out on Wednesday, and yeah, they just set such clean highs when there's liquidity above market. Yeah, I'm not going to buy into that. So the thing that I used to realize what happened in the market was that price took out the previous daily low. I always say this time and time again, most people overlook it, but the previous daily low and the previous daily high is very, very key. Previous weekly high, previous weekly low, still very, very key. Pay attention to it. It will save you a lot of losses and a lot of heartaches basically when you lose money. So price runs down, takes out the previous daily low, and then starts pulling back up. Now I did not actually take this trade again because my entry wasn't qualified. I wanted to see price push above this breaker before I get in, but that did not happen. We just had the big spike up, and then price just kept on rallying for the whole day, which I was still fine because that just justified that I was right about not selling into this and falling in love with price because of this double tops that we're having. So those are some things you need to look into when you see double tops that are so clean. I'm not saying it does not work. It actually does work, but 9 out of 10 times they're setting up liquidity in the market because first of all, the smart money, they have their buy limits, their buy stops here, they have their buy limits here, but other people are looking at this like, all right, I'm going to sell into this and da 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 da. Most people are having sell stops, expecting that when price takes out the previous daily low, FOMC should push price lower, but technically that is not going to happen. I always see something every time: price is price. No matter however you want to look at it, price is price. Now going into the next day, what I was just looking for was a 10 pip run above the previous daily high. Now if I measure 10 pips above this, yeah, so this is 10 here. Well, not really perfect. I'm just going to use this one. So if you're looking at 10 pips above the previous daily high, so you're looking at 10 pips above the previous daily high, you can see that as soon as we took out the 10 pips, the price starts finding resistance. These things are very key. Look for those levels in price. So when price takes out 10 pips above the previous daily high, price finds resistance. But the reason why I wanted to go short on these is that I wanted to fill in the void, or at least fill in the 50% of the void that price created on Wednesday from the FOMC price move. Now, if we're looking at this and we're looking at the 50%, we're looking for the 50% level. Here it is. This I like how I basically count is basically the candles that led to that move, or rather the candles that activated that move without a break, basically no down candle in between. So if I'm looking for the 50%, here is the level that I was looking for. All I just wanted to see price was run back to this level. This was my own personal target though. Other people might have had other levels in mind. This is just what I was looking for, price coming back to this level. So looking for price to fill 50% of the void. If I zoom in on this, so now we have a void that we're looking for in price. So we have this void that we're looking for in price. Another thing is that there was an order block, so sorry, a breaker, so an hourly breaker. So if you look at this, here is price taking out the previous daily low. So if you mark out this hourly breaker, so here was the first the first TP for if I was to be in this trade, and here was my maximum TP. What I was just looking for was the last breaker. I've since realized that breakers act much better than order block. Well, that's just my view on it. You can take it or not. So here is the level, and then here's the other level that I was looking for. So now price is giving me the 10 pip run above the previous daily high as expected. Now what I'm just looking out for now is just the 15-minute breaker. This is all I'm just looking out for, a 15-minute breaker. So when price pulled back, closed below the breaker and started distributing lower, a lot of people in my trading started saying, oh yeah, they're jumping on the move, they don't want to miss out on the move. But this is something like, once you've done something over and over and over and over again, it creates like this muscle memory and this confidence in you. And what I just did was I had my sell limits here and I did not touch it. Had my sell limits here, didn't touch it, and price basically had to come back to that level, and people in the trade were making fun of it. They were like, oh yeah, Nana's the market maker, which definitely I'm not. But it's just basically understanding how levels work in price, what levels to look for in price. And the level that I was looking for was 1.1495. Still another key level. You need to understand how to read these levels in price. So 1.1495 was the level that I was looking out for, and price drops this far and then comes back and nicks me into the trade. So now I'm in the trade and I'm seeing price meander for such a long time, and you need to understand that it's good to push the limits, but once you've reached, because actually my aim is like to make 40% a month, right? That's just my aim. But I had done like twice or thrice of that goal this month. So when I saw price nicking on that level for too long, I shaved off a lot size. I think at this low here, shaved off a lot size, and then when price pushed back up, I put myself to break even. So I got taken out, and I told everyone in the trade, like, look, I'm not just comfortable with the trade. I shouldn't be trading this, because this is like the 31st of January, and there's something about losing. Let me give you an example. If your friend comes up to you and gives you, let's say, £20,000, right? Now, all of a sudden, you have £20,000, and you have this imagination of what the £20,000 will do for you. You get a car, pay a rent, get whatever it is, and then all of a sudden he comes back to you and says, "Oh, can I have 13,000 back?" Like some proper emergency happened. Like let's say his mom, well, whatever happened, but he needs the £13,000 back. Now, even if you give him that money, you're going to be hurt because you just lost 13,000, but you're just forgetting the fact that you still are £7,000 richer. So that's something like we humans were really, really loss adverse. Like we don't like, even if it's not ours yet. So that's basically what happened to me here, in the sense of I was up about 103%. I think that was my peak of this month, 103 or 106. But I ended the month with like 101. So I just told myself, if I end this month in 99, I will be very, like, I won't be stable. So I just decided to help my mental stability, put myself close to break even. And then this happened, but eventually price still played out how I expected it to, distributed, little pullback, and then reached out for all the levels, and that was fine. I was happy that as soon as the 31st of January came, I was still above 100%. I wasn't about to trade that for nothing else. The risk reward wasn't worth it for me losing. If I lost 10% that day, or 5 or 2 or 1, even if I went down to 99.9, I just liked it that I was above 3-figure in percentage. So that's why psychologically I didn't take advantage of this trade. But a lot of people in the trade room oh, Courtney went short from here after I gave the breakdown. She did amazing on this day. Prayers, everyone did amazing on this day because I gave the breakdown. They obviously applied their own technical know-how to it and then took advantage of it. Now, coming to Friday, which is the one that I called out on Instagram. I hardly call out trades because I don't like it. You could just give a basic premise and someone risks their whole account on it. So I don't really like calling out trades. But what happened on this day was that I gave a diagram, and I'm just going to try and reenact shit. Fuck it. I'm just going to try and basically print out the same diagram that I gave out on Instagram, and see, so you can see why I had that diagram up. Now, this is what I had up on Instagram and equally in the trade room. So then I had this level. I think it was this. Was it? No, sorry, it was an hourly block. Yeah. Now, this is the image that I had on my Instagram. What I wanted to see was price fully fill out the void, run into the order block, push higher, break, like basically push higher back above this, then find a breaker here, and then run higher with price. You know what? Let me just try and look for. Nah, do you know what? Let me not bother. I'll try and put in the image somewhere right now. You see the image of basically the order block, or basically the charts that I had out. Yeah. So basically my plan was to make price run. My plan was to see price run into the order block, and then push back above here. So basically, when price pushes back above, I'm going to look at that as price pulling back into the range. So that's going to give much more access price to push higher. And then one thing that I forgot to include in the diagram was here we had a void here. So basically, a series of down candles. I wanted to see price fill in the void. So my first initial target was just to see price fill in the void up onto this level. Here was a 13-minute order block. This was my first trouble area. I want to put on the 30 minutes chart so you can see what I'm saying. So on the 30 minutes chart, here was my first trouble area. So this 30-minute order block, this is as far as I was willing to see price go before moving my stop loss or shaving up lot size or whatever the case may be. And then I equally had this as an extension, this other highs as an extension. You need to always have first trouble areas, and then you have your best case scenario. That's how I always look at trades. What's my worst case scenario? What's my best case scenario here? Now, when you're doing analysis like this, you have to understand that sometimes price is going to play out pip for pip, word for word, in the sense of it runs into this level, touches this level, spins off of this level, and then you feel like a god, like, oh yeah, look at me calling the market. But you have to ask yourself, okay, what is like the thing that if it doesn't play out, I am still fine with it, I'm still going to take the trade regardless? And what's the thing that if it doesn't play out, then I'm not going to take the trade? You need to have those contingency plans in place. So for me, the one thing that I didn't really care about was price pushing into this order block, but the one thing that was most important to me was seeing price taking out the previous daily low and then seeing price push back up into the range. So I didn't care if price came down here and then pushed back up, I would have still taken the trade. So sorry about that again. Something just came up urgently that I had to go attend to. Trying to gather my thoughts again. All right, so basically you need to have those contingency plans in places, in the sense of what's the one thing that I have, like what are things that I can do without in this setup, and what are the things that I cannot do without sternly in this setup. So for me, the one thing that I couldn't do without was basically seeing price not take out the previous daily low. Like, I don't care what would have happened here, but if we didn't take out the previous daily low, I wouldn't have taken this trade, because that wouldn't have given me the confidence to know that liquidity has been taken from one side of the market and they're about to use it to drive to the other side of the market. So basically, when price took out the previous daily low, same setup again. That's what I always put, like, there's nothing fancy that I do. It's just basically having the discipline to not do dumb shit that wipes out your profit. That's one. And then secondly, being able to wait for the right setups to come to you, even though it means that you have to miss a couple of trades that you were sure that they were going to work out for you. So now what I did was I basically waited for price to take out the previous daily low, and then here is a breaker. If you weren't fine with this breaker, here is another breaker that you would have gotten in from. And I was so happy that people took advantage of this. Some people sent in their charts of the trades that they took and how it worked out for them. And as soon as price got to this point, I even went as far as updating people like, you know what, collapse your positions now. There's no point holding on to this, because I knew that the majority of the move had happened. Yeah, in as much as there was a probability that NFP would have probably pushed price, or price would have skyrocketed, taking out this high. Are you really going to risk that? Because if you got in from this first breaker, like the really tiny one, it would have been up like 20R. If you decided to add a couple of pips, let's say you decided to put your stop loss here, still a 10R minimum. If you decided to go for the previous daily low, still a 4R. Like, you can't tell me like 4R is not a good trade. If you decided to go for the bigger one, which this is what most people used, it would have still had a 7R minimum from this trade. So at this point, this is when you need to know, am I being greedy or am I being smart about cutting this trade? Am I being fearful or am I being smart? But for me, this was a very smart thing to do, cut the trade, because you can see what happened next was NFP spiking price lower, pushing price up, dropping price lower. You do not really want to be in trades like this. I am never like, that's when I ask people, let me see your trades. Like, basically my members, what I want to see is the clean, concise price move of you price getting from point A to point B. It doesn't always happen that way, but if you show me a trade and you manage to pick an order block from here, like, really, what happened to you finding a trade here? Like, why did you have to wait till this point? But either ways, I'm not basically discriminating where you can make money. However you want to make your money, that's fine. Be it trend lines, indicators, whatever way it is, as long as you can hack it and take something from the game, that's really all what you need. But anyways, this is like the first time I'm ever letting other people see what my weekly recap is like. I hope this was helpful to you guys. Drop in comments, likes. If you need to ask me any questions, just follow me on Instagram, which is Yaske on charts, and it's actually not spelled Yaske, but it's pronounced Yaske, so it's basically YASUKEONCHARTS. So just hit me up on there, and you can find me on Twitter, the same thing, Yaske on charts too. And if you equally have any questions, you could just drop it in the comment section, and I'll do my possible best to reply to that. But either way, I just showed you shit ton of way of how you can dissect the market. Even when some people say that this week looked untradeable, this week looked too difficult, this week looked too hard to break through, there is always a way to dissect the market. As long as you have your discipline and the patience, you'll be able to read in between the lines. Like, to someone else, this thing happening here is unimaginable. There's nothing that can come out good from it, but I was able to properly dissect this right here. So that's just it. I hope you took something away from it. If you like the video, share it with your friends, subscribe for more videos to come. All right, bye bye.